We regularly get asked to do a video on retirement saving, but have preferred to focus our attention on financial freedom today rather than at some distant date in the future dictated to us by a government. But the announcement that Vanguard are finally going to offer a personal pension, otherwise known as a SIPP, in early 2020 is potentially game-changing for those that are building a retirement pot.
SIPPs have long been a great way to invest for old age, with fees being moderately low for many years. But with the introduction of a Vanguard SIPP, the industry will potentially be turned on its head, with groundbreaking cuts to the cost of retirement investing. You simply have no excuse anymore not to retire wealthy.
In this video, we thought we'd take the opportunity to highlight what Vanguard are offering with their SIPP and to talk about how we save for retirement with the goal of retiring wealthy. Let's check it out.
Welcome to MoneyUnshackled.com, the investment and finance channel and website that sets you and your finances free. This is Andy, I'm Ben, and if you like what we have to say, hit the like button and click subscribe.
Also, don't forget to check out the MoneyUnshackled.com offers page, where we are proud to bring you hundreds of pounds in offers from the likes of Asset Capital, Lending Works, RateSetter and so much more. We'll put the link in the description below. Let's get into the video. What is a self-invested personal pension? In one way, the Vanguard SIPP is no different to any other SIPP, and by that we mean it will allow you to save in a tax-efficient way for your retirement. A SIPP is not particularly exciting, but they do have a few cool features.
Firstly, they allow your money to grow without the greedy taxman taking a huge slice. Over the years, this tax-free status will allow your pot to grow unhindered to hopefully unimaginable heights.
Secondly, you will also get tax relief on your pension contributions. In effect, this means the government will pay into your pension if you do. As an example, this table shows that basic rate taxpayers would receive an additional £2,500 if they contributed £10,000 themselves, or even more for higher earners.
Sounds amazing. Where do we sign up? But hang on. The main downside with any private pension is that you cannot access it until you are at least age 55, and this will be increasing for our generation until likely our 60s.
The fact that your money is inaccessible until your older age is bad enough, but meddling governments have and will continue to increase this age. We just don't trust governments. The Western world, including the UK, is walking blindfolded into a financial catastrophe caused by excessive debt. It's been heavily speculated that a future government will have no choice but to dip into this tempting pot.
What is the Vanguard personal pension? The Vanguard SIPP has the same pros and potential downsides as what we have just discussed, but they do it with rock bottom fees. Their platform fee will be just 0.15%, which is much lower than all other existing platforms. That's so low we feel it's worth repeating. They only charge 0.15%.
Moreover, it does not charge you to buy and sell funds or ETFs, meaning you won't incur further trading costs as you do with the majority of other platforms. You will be able to invest in any of the Vanguard funds and ETFs, of which there are 76 at the time of filming. And if you are a regular watcher of this channel, you will know that Vanguard funds are some of the best available on the market.
You will of course also incur the inbuilt fees from the funds, but these are also extremely low cost. It's worth pointing out that you will not be able to invest in non-Vanguard funds, and you will not be able to invest directly in stocks. If you're interested in this, check out the AJ Bell SIPP, which has the ability to do this, but is more expensive.
Is a personal pension right for you? When investing for retirement, it is almost always a good idea to first use any matched contributions offered by your employer. This is because you will essentially get a 100% immediate return due to your employer paying in as well as you. Then of course you get the government tax relief on top. It's great to see that Vanguard are even encouraging this, which is something that we certainly support.
This then leads us on to whether you should be investing additional retirement savings into the Vanguard SIPP. This is only something that you can decide. If your plan is to retire either at or after the minimum age from which you can access your pension pot, then this is probably an excellent choice, particularly if you're a higher or additional rate taxpayer.
What do we do? Whatever anyone else does doesn't necessarily make it right for you, but we want everyone to live a more fulfilling and enjoyable life starting today. So we're always more than happy to share what we do in the hope that it might inspire others.
Neither of us add additional money to old age retirement savings over the matched amount that our employers will pay. We feel that money in our hands today can be invested more wisely so it can start generating as an income now, or at least much sooner than the state dictated retirement age. This benefits us in a number of ways. We get the 100% top up from our respective employers. We get the tax relief. This acts as a plan B should our plan A of achieving financial freedom today fail. The money that we don't put into a pension is put towards our business and investing ventures.
But that doesn't mean that we don't use SIPPs. I invest in a SIPP because I have consolidated several pension pots that I have accumulated over the years from changing jobs. I don't invest additional monies into it for the reasons just outlined, but I find it a great way to manage my pot rather than having retirement money all over the place in old and more expensive workplace pensions. With Vanguard entering the SIPP scene, I will seriously consider transferring my SIPP to them because I currently have about 75% of my SIPP invested in Vanguard funds. The question I need to ask myself is whether it's worth paying additional platform fees across the entirety of my portfolio for the sake of a small allocation that I have invested in non-Vanguard funds.
This is my plan for when the Vanguard SIPP arrives. I have numerous pensions dotted around from different jobs, and I want to bring them all together under a single low-fee umbrella. If you too have had numerous jobs and built up numerous pension pots, perhaps you too could consider bringing them all together under the single Vanguard product. Now, let's see what they have on offer. Vanguard funds and ETFs. Vanguard offer a great range of funds and ETFs that cater for pretty much any experience level. For those who just want to invest and forget, then perhaps look at the family of life strategy funds, which cost just 0.22%, or the target retirement funds, which cost a little more at 0.24%.
Alternatively, you could opt to be a little bit more selective and construct your own portfolio. We like to build a world portfolio, which can easily be done using what Vanguard have on offer.
Question of the day: do you think that the Vanguard SIPP is going to be game changing, and will you be moving all your pensions into it? Let us know in the comments below.
Thanks for watching! On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.